It's not about how many times you get knocked down in a fight. It's about how many times you get back up and continue to fight back. And that's what I believe Hims has continued to do after FUD news after FUD news. FUD, fear, uncertainty, and doubt. They've continuously been beaten down this past 3 months, essentially, after they had a huge rise and a breakthrough moment after amazing earnings. This is a fabulous growth story. And ever since then, they've just been beaten down for the past 2 months with fear, uncertainty, and doubt on GLP-1s. Obviously, the market had some fuddish times with the Fed and his remarks on inflation and interest rates, and this name's just been beaten down, but they continue to fight back. They continue to hold this 23.48 to 25.71 dip buy box area. And subsequently, it's the exact portion of the cup and handle breakout pattern. So we continue to basically, as you see on the chart, we broke out of the cup and handle pattern, which is dated back to February of 2021. We broke out of it. We came back, as 60 to 70% of charting patterns do, to retest said breakout to flip these resistance points into support while also confirming the breakout of the cup and handle pattern and then marching higher. I believe we are at the point that we are about to start marching higher. The FUD is over. The attacks might still come, but this next earnings call here on March 3rd, I believe is going to be the catalyst to shut up all of the haters of Hims, to shut up all of the short attacks, to shut up all of the people that are shorting this company when they don't know what the heck they're shorting. So in this video, we're going to talk a little bit about what I believe fundamentally is going to happen with Hims and what I believe technically is going to happen to him. So let's get into it. So as you see, cup and handle, a multi-year cup and handle dated back to February 2021. Like I said, we have this breakout. We had this massive FUD happen, pullback, and essentially we are now at a retest area, and we have confirmed a bounce off this retest area and a continuation higher. Next, we will see 30, in my opinion, then 35. I believe intrinsic value of this company or fair value of this company is $40 per share, as we'll get into my spreadsheet, my investing spreadsheet that I use and to basically rate a company, a buy or sell. And then essentially our measured move of this massive cup and handle is $48.55. So we have a long way to run. We have a Williams consolidation box forming, and we are in an uptrend. Also on a volume shelf, we are red on the high five indicator, but as you're going to see on the weekly, it's getting very close to flipping to green. Once we flip to green, this is an all systems go. And if we look down to the daily chart, we have this beautiful falling wedge pattern that we broke out of. We also came back to the falling wedge pattern today, retested which was also at the 90 MA, and we are continuing higher now. We are continuing to make a hammer candle wicking off this retest area, and I believe to continue higher. Continuing higher in this Williams percentage range uh, uptrend. While this continues to run on the daily, we will flip to green on the weekly and we will flip to green on the monthly, right? And as we flip to green on all of these different charts, starting daily, then weekly, then monthly, it'll become more and more of a um, stock that people start really, really getting behind because they see the technical analysis. The traders really start coming in groves. The fundamental analysis, as I'm about to get into here, they'll start really realizing what this company is and where they could go. So I've actually updated this. It's no longer even a $40 intrinsic value. Now we're at a $52 intrinsic value on this company, which is just massive, just massive. And essentially, what we're seeing here is the fact that we have a company growing 30% plus for the next couple years, and then I have them and analysts have them dipping down to 20%, and then later below 20% for a 10-year analysis. while also EPS will continue to boom and grow as we go. This is mainly a discounted cash flow model, which we have a 15 terminal free cash flow yield put on this name, a 10% for the next 5 years, and a 15% for the next 10 year, the last 5 years of this 10-year analysis for the free cash flow margin rate. We have a 2.71 free cash flow and a forward free cash flow of 2.5%, which is very favorable. Um, our PEs are a bit high, but at the same time, it's not really an earnings explosion yet. It's more so of a growth name. And with growth names, you really need to focus on that free cash flow, because that free cash flow is what really is going to drive this company to have more favorable EPS. And then our PEG ratio is 0.45, which obviously anything under one is just phenomenal. So essentially, we have a five of uh, 5 of 5 setup in my mind, excluding PE, obviously, and just going by free cash flow and the PEG ratio. We have a really good setup here. And a rule of 40, it's a 40 as well. So taking in the things for a growth company, PE matters, obviously. But again, I'm just simply um, choosing to focus on the free cash flow and the overall revenue growth of this company. So as of right now, we have a current margin of safety of about 48% here. Like I said, it's a 52 um, dollar intrinsic value or fair value, and we're currently sitting at 27. So almost almost a double from where we are currently at on this name. And just believe in this company on the fundamental standpoint that they're going to continue to grow. Their cash to debt balance is phenomenal. They're raking in a lot of free cash flow for the size of the company right now. Like I said, revenues are pegged to continue to grow, and I think as they build out more and more of a position in this sector, they're going to be able to have more favorable margin rates on EPS, profit margin, and obviously free cash flow margin. And I believe that because essentially they they know how to speak millennial and Gen X and Gen Z language, and I believe this company, along with other companies such as like SoFi, are really attacking those groups of people to really uh, you know build this business around them instead of the older generation. Any older generations that they get using their products is only a cherry on top. So essentially, I have this a 53% CAGR on this name, growing to $234 possibly. Again, these are pretty crazy metrics right here, but it is possible in my mind for a 5 year and a 10-year analysis, if we hit on all of these, right? So these are a bit conservative. So these are possible in my mind, but again, I'm more worried just about the intrinsic value being 52 and the stock being $27.41. So the fundamentals are lining up, the technicals are lining up, and this name is, in my mind, pegged for a very, very large move to the upside and a continuous move and not a up and down type motion. We needed this retest right here in order to really get to the bottom of this bullish channel. That we have a lot of room to run up here to the top of the channel while also breaking out, retesting, and then continuing higher on our cup and handle. If you like this analysis, fundamental and technical, and you want to hear more videos like this, please drop a comment below letting me know, and please like the video and follow. That way you can keep up with everything. I continue to post here and on other socials. And if you don't know about my other socials, just check my profile, or yeah, just check my profile and you'll see my other socials in there as well. So I appreciate you guys tuning in. Drop a like, drop a comment, what you think about this analysis, and I'll catch you in the next one.